Cover a few quick, neat little things we got lined up for Wednesday's report. Of course, the one thing USDA does is they go back and revise previous production estimates. So for the 2010 crop, I say actually the 2009 crop is what I've listed here, the last one here. You notice USDA had a 230 million bushel increase. So last year on the January report, USDA added 230 million bushels. The trade was actually expecting steady, if not actually a little bit less than that, a smaller revision here. That's what last year's problem crop. And also the trade also got the number, in fact, the number from 2 years ago wrong. The trade was expecting a good 100, I believe it was about 100 or 150 million bushel drop. USDA actually added 81. What I want to point out here is to analysts and people who make up guesstimates for this report, this is the toughest one of the entire year to make up, because if you actually look back at history, there's actually no rhyme or reason to what USDA actually does in this report. There's no set pattern. So bottom line here is we always get some good funny ones here from USDA. So we'll see what they have lined up here for this year. Another thing that we've got to talk about here is on a secondary note. Usually the grain stocks report is kind of a smaller report tucked in the back that people don't really pay attention to. But we've got a lot of press with the grain stocks report in the past 3 to 4 quarters. One thing I've laid out here is, based on the grain stocks report, we know how much usage happened over the previous quarter. And USDA gives us good estimates for usage, mainly for estimates for exports and also for ethanol. And they leave the rest in this kind of the feed use category. The toughest part of this whole category is there's really no actual measurable way of monitoring feed use. There's no actual monthly or weekly stats on how much goes to livestock. And as you can tell by these white bars, there is a USDA kind of flip-flop each and every quarter based on this feed use number. So, for instance, first quarter last year up 3%. The next quarter they dropped 14%. This is versus previous year here, and then up 36% over here, and then dropped 29%. This is a very tough, crazy. I think from an analyst perspective, this is a tough category to guess in the first place. And from USDA's history last year, this is a ridiculously tough trying to guess what this number will be this time. So I just want to point out we've actually got not just some question marks regarding grain production, which will be revised here on this report, but also this very first quarter of corn usage that USDA now has to guess as well. So I want to point out that there's going to be quite a few areas where we could see some surprises on USDA's report on Wednesday. However, if we get things right and that happens, we're going to see some declines here in ending stocks. Allendale has ending stocks dropping from 832 down to, I believe it's going to be 756 on our number. Yeah, 756 we're looking at. And the bottom line is, if that happens, we will see another drop in stocks to usage, which is these bars down here. So stocks to use drop below, in this case, 6.2% is what it was last year. That's going to put them to the tightest levels since, in this case, this is June and July of 2008. So if we get that to happen, we're still looking for the bull rally to go, and in fact, it may even go beyond our 650 target here that we have laid out here. So we think 650 is already in store based on the current stocks to use. Yes, we could even go even a little higher if we tighten things up a little more than expected here. So I just want to point out that we're still, in general, still positive this market based on that type of measure. As far as the corn, one last thing I want to point out, I didn't include a chart here, but if you guys take a look at our special reports and look at the commitment of traders reports, I want to point out, kind of interesting to see that in the past 5 weeks, the previous 5 weeks, if you look at that chart, index funds actually were buying and adding to positions aggressively. They added 21,328 new contracts during the month of December and the first week of January. January 4th is what that goes to. We won't get any idea on what kind of rebalancing or liquidation was going on from Wednesday last week to current. That won't come until Friday's report. So I want to point out, kind of interesting to see that we added 21,000 contracts before the rebalancing occurred. Over on the soybean side, same type of story with the corn, but as you can see, the numbers aren't that dramatic up or down. Numbers increasing and decreasing. Generally expect about a 40 million bushel change either way. Allendale is actually expecting just a very small change, 4 million bushel drop here in production. So it shouldn't be a market-moving event. As far as the wheat, it's kind of interesting to see that this wheat, the drought monitor, actually continues to get worse. This one is actually updated through January 4th is what this is here, and this has gotten worse. In fact, from the previous week, this whole area for the plains, kind of balancing that, as we all know here today, the fact that we do have some precip coming. This is a 5-day precip forecast. If you look at day number 1, it's pretty much over the plains and parts of Iowa. Day number 2 and 3, you're hitting the central Midwest. Day 3 through 5 are going to be the eastern portions here. But I wanted to point out that as far as wheat goes, we've got these significant problems. And for right now, it's interesting to see that so far we've got a little precip coming here for certainly a good chunk of the plains. So interesting to see that in here. So Wednesday's report, a lot of excitement, a lot of action. We're going to see what happens there. But